Good morning, everybody. On Black Friday, the 27th of November, pre-market. If you haven't been watching television or Bloomberg for the last 24 hours, Dubai is defaulting on their debt, and that's the excuse of the day for a global sell-off. There's a much bigger issue here, I think, than Dubai defaulting on a mere $60 billion in debt. There's all the counterparty risk that's out there, and for now, for the first time in months, the carry trade of short the USD and buy everything in sight, that whole trade is now in jeopardy. So with today only being half a session and volume will be extremely low, regardless of what happens today, I think there's a much bigger issue that's going to come in on Monday and Tuesday next week. For now, we're looking at the Dow futures off 220 points, or S&P futures off 30 points, and NASDAQ futures off, bear with me, NASDAQ futures off 48 3/4 for now. Most of the panic that happened, especially over in Japan and Hong Kong, was in the financials. The Hong Kong market was off over 1,000 points overnight. The Nikkei was down 300. Europe opened very low, but is bouncing higher. Let's look at our own situation here, and I'm only going to talk today about the November leg. These levels here that run from 1029 up to 1113 on the S&P 500. Hard support should have come in at 1085.58 on the S&P, but we're already trading down at 1079. That means we're at least going to come down and test the 50-day simple moving average at 1073 on the S&P. And we also have a cluster of diatonics in the same area, 1071, 1074. So three levels of support for the S&P around the 1073 area. If that were to fail, and I don't think it will today, but if it does, 1055 is where this bloated pig could be going to the downside for the S&P 500. The number on the Dow, major diatonic support, is at 10,223.39. The print on Dow futures right now is at 10,225, so it's holding some support in terms of diatonics. Below there, 50% of the November leg is going to be 10,087.28, and if you recall, we had a major diatonic, and it was the October high on October 19th at 10,092. So a lot of support in that 10,087 area if this 10,223 should be lost. Below that, 50-day simple moving average, 99.66 for the Dow 30. Now, over in tech on the NASDAQ 100, you would think that Dubai defaults would have nothing to do at all with tech, and frankly, I wouldn't want to be short anything in the NASDAQ 100 going into today's retail sales on Black Friday, and not to mention that, Cyber Monday. I would be petrified to be short. However, that said, Google is off 12 pre-market, Amazon is down 5 pre-market, and Apple is off 5 pre-market, but Apple's bouncing. On tech itself, it's currently going off on the futures at 1747.25. There's major diatonic support and 50-day simple moving average support, all in the 1733 to 1738 area on tech. So maybe another 10 points downside on the NASDAQ 100, and below there, the number 1703 even. Again, I don't know that I would want to be shorting tech at all. I would be expecting a dip buyer sometime late today, although, again, it's going to be very, very low volume and a half session today. All right, now, with regards to the main issue, the carry trade and the Dubai situation, most of the stocks that were getting smacked, as I said, were in the financials, and that would be for counterparty risk. Goldman has lost its 100-day simple moving average on Friday's close. I mean, not Friday's, Wednesday's close. Not like Goldman might have had advanced knowledge that this was coming. Just lucky, of course, on Goldman. It's trading about 164.50 as I make this hideous screed. We can expect support at 161.73, 160.34, and then that last low from back in September, 158.13 for Goldman Sachs. The 100-day simple moving average up at 171.02 is definite resistance for now on Goldman Sachs. JP Morgan closed right on its 100-day simple moving average on Wednesday afternoon. It's trading down about $2 pre-market here, and it's coming down right to its it would have been its October low at 40.53, currently ticking at 40.81 on JP Morgan. Below there, first diatonic short target 39.66, 38.21. Second target to the short side on JP Morgan. You can expect this $42 area where the 100 SMA is to be resistance going into today's session. Okay guys, Morgan Stanley, I'll make this the last one because the situation really is just too cloudy to get crazy about on a holiday session. Morgan Stanley's trading right down a little bit below its 100 SMA. It's going off at $30.40 right now. First support, 29.75. Cluster of support, 4 levels actually, in the $27 to $27.90 area. You've got 3 diatonics in this area, and you also have the 200 SMA, which will be very thick support for Morgan Stanley. The situation is improving a little bit on the futures. Dow now off 209, S&P off 28.50, and NASDAQ futures off 46.25. Again, I think the real story will play out on Monday and Tuesday to see if this is a one-day blip or if that carry trade is definitely in risk. And if they start unwinding that, you're going to see the short squeeze of hell in the US dollar and a corresponding drop in equities. I am King Cambo. Smoke them if you got them, and that's how I roll for Friday, the 27th of November, 2009.